Good afternoon, everyone. This is Henry, and starting off tonight's review by looking at the S&P futures, we've got Powell that is now behind us. We've got the quarter-point rate hike that has taken place, was pretty much all but assured, has now come through. And, what will really be important tomorrow is, of course, the reaction. You get some of that today, but I believe a lot of this move can really be seen the day after the Fed. So I want to come into tomorrow nimble, willing to accept whatever the market is bringing. It's part of what makes it a little difficult to predict tonight. But I will tell you that at the heart of this, if we're looking at the correction that the Netflix and Tesla earnings triggered, you can see how that was a pretty good, significant, flush down lower. And if bears were really going to take control of things, well, then they should fail, or bears should take back over at the 618 retracement of the move. You can see how that hit that with a pretty good degree of precision. But from there, they never were able to make the new low. Then from there, you've gone through and chewed through that resistance. And if it was going to be a double top, right, that didn't work because 4610 has traded. So at the heart of a bullish trend, what you're going to look for is a pattern of higher highs and higher lows. So if we think here's a high and here's a low, well, here's a now higher high. And as long as we can stay above, right, those previous swing lows, then I believe the next spot you will target is the Fibonacci extension at 4641 is that level. So I think there is potential out there. Obviously, if we come into tomorrow and it's, not looking like that, I'm not going to force it, but I will be trying to key off of Meta. So at least so far, Meta has been within the expected move, but I think you've got a really key level to watch here. Now, I'm showing this to you on a weekly chart, which does not show the extended session data. You can see right here, however, that the stock is bid at $321. So it is here up about, $23, $24 in the extended session. That $321 is the 786 retracement of the major correction, right? The move from 384 all the way down to 88. So if the stock is going to have any kind of reversal back lower, that's the last area that bears can really make that argument on this time frame, right? On this type of perspective. But again, you get above that in a meaningful way, and then the extensions of the move will have you target 464 and eventually 567. So it's a pretty fascinating chart, something that really, I guess since the announcement of them making their own chips has really kind of been on fire. Regardless, that's what I'm seeing here after earnings. And that may be helpful tomorrow. And then, of course, Apple. So Apple has a monthly squeeze that has fired long. And inside that, I'm usually going to try to find the shorter time frame squeezes to play in that same direction. So at least for now, I'm not going to speculate on the earnings themselves, but I am trying to see if there's a little anticipation into the report. So pick up the $200 calls tomorrow, maybe add to them on Friday, and then ideally get to sell those at a fresh high before the earnings numbers come out. So those are some of my strategies. I hope you find them helpful. You'll have a great rest of your week, and I hope to see you in the rooms tomorrow. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful. And if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.